Welcome to the deep dive. We're here to, cut through the hype and get straight to the core insights. And today, we're diving deep into Bitcoin. I mean, think about it. Back in 2009, it was this niche tech experiment, almost anonymous. Now, it's global, recognized, okay, yes, highly volatile, but definitely a financial force. It's had quite a journey. But the big question, the one everyone seems to ask is, what does Bitcoin actually look like by 2030? So our mission today is to sift through a whole stack of sources, ones that are actually trying to forecast Bitcoin's long-term value. And let's be upfront, predicting the future for any asset is tough, especially Bitcoin. It's just so dynamic. You've got economic changes, tech breakthroughs, adoption rates. It's a lot. But experts and models are giving it a shot.
Exactly.
Like what you hear? Subscribe and hit the bell. New episodes every week.
And that's what we're going to explore today, really trying to give a balanced view. We'll look at the quantitative stuff, the models, but also insights from crypto experts, the big names, and even projections from traditional finance. Plus, critically, the fundamentals, what actually moves the price. And just a reminder, any numbers we mention, they're references, okay, not guarantees. The aim here is to give you a solid understanding of the possibilities and maybe more importantly, the why behind them, so you can form your own view.
Absolutely. So whether you're deep into crypto already or just kind of curious about what the next, say, 6 years hold for this deep dive is for you. Okay, let's unpack this, right? Let's start with the models. These analytical tools trying to project Bitcoin's price. They're not just pulling numbers out of thin air. They're based on specific ideas. When you look at them, what really stands out? I mean, what's the biggest challenge they face with an asset like Bitcoin? And which ones seem, most compelling right now?
That's a great starting point because modeling Bitcoin is tough. It's new. It behaves differently. What's interesting is how they try to find some kind of pattern in the, sometimes apparent chaos. Take the stock to flow model, the S2F. It's probably one of those well-known. Its whole idea is linking scarcity, the existing stock, versus the new flow from mining to the price. And those Bitcoin halvings happening roughly every 4 years, they're absolutely key. They slash new supply, boost the scarcity ratio, and that mathematically pushes the S2F trend line higher over time. Now, it tracked incredibly well for a while, up until 2021, but then crucially, it undershot quite significantly during the 2022 downturn. So what does that tell us? It's maybe useful as a scarcity compass, highlighting Bitcoin's unique supply schedule, but perhaps less of a precise calendar for predicting price on a specific date. Market sentiment, macro factors, they can definitely throw it off track temporarily. That's a really important distinction. Still, if you extrapolate aggressively from that model, well, it does point towards 7 figures by the late decade.
That scarcity compass versus precise calendar idea, that's really helpful. It frames its use nicely. You mentioned finding patterns. I've also seen this rainbow chart. Looks very visual, tracking historical cycles. How useful is that? Is it more about understanding where we are, maybe, than predicting exactly where we'll go? And what does it hint at for the late 2020s if those patterns hold?
Right, the log regression rainbow chart. And you're right. Think of it more as a visualization aid, not a prediction engine.
Yeah.
It essentially uses these logarithmic bands based on past price action to show zones from sort of fire sale undervaluation up to bubble territory. It doesn't predict timing, but it clearly shows Bitcoin has historically cycled through these zones, up and down, but generally trending up. So if that historical channel continues to hold, the late 2020s could see prices drifting towards those upper bands. That would imply, prices significantly higher than today, just based on following that long-term growth pattern within the channel. It's a great visual for its history.
Okay, so S2F is scarcity, rainbow chart is historical cycles. Are there models that focus more on the network itself, like how many people are actually using it?
Absolutely. And these are fascinating too. Models based on Metcalfe's law, sometimes called network adoption fits. The basic principle: a network's value is roughly proportional to the square of its users. Think about like the early internet or even telephones. A few users, not much value. But as more people join, the network effect kicks in, utility explodes, and so does value. Now, connect that to Bitcoin. You see steady user growth. You see increasing institutional access. Those spot ETFs are a huge deal here. And the base cases from these kinds of models, they tend to cluster around $1 million by 2030. And what's really interesting is this doesn't necessarily need some crazy bubble phase. It could just be steady maturation and adoption driving that value.
That network effect idea is really intuitive, makes sense. So beyond those main ones, are there other ways people are trying to value Bitcoin? Maybe comparing it to gold or thinking about, more extreme outcomes.
Oh yeah, definitely. You've got market share parity models. These basically ask, what if Bitcoin captures X% of another market? So it takes a slice of gold's market cap, maybe that implies 500K. If it captures a small bit of the global bond market or remittances, you could see numbers like $2 million plus. But that really depends on Bitcoin actually displacing those incumbents. That's the key assumption. Then there are power law or corridor fits. If Bitcoin stays within its historical growth channels on a log scale, these also suggest upper 6 to 7 figures by the late decade. And then you get to the really extreme stuff, extreme debasement cases. If you imagine severe inflation wiping out fiat currency value, or this idea of hyper-Bitcoinization, where Bitcoin becomes dominant, some forecasts hit multi-million outcomes by around 2030, 31. But let's be super clear. These are not base cases. They're outlier scenarios. So if we step back, look at all these quantitative models together, the common thread seems to be Bitcoin's fixed supply plus growing adoption. That tends to skew things bullish long term.
Enjoying the insights? Tap subscribe and enable notifications so you never miss our next market move, news, charts, and opportunities as they happen.
Conservative models might point to, say, 200K to 700K by 2030. More aggressive ones definitely point towards $1 million plus. But, and this is crucial, you have to pair these models with looking at the fundamentals. The models give structure, but the real world adds the context.
Right. The models give us numbers, but it's one thing to see that, another to hear what the actual people, the big players making bets, are saying. This is where it gets really interesting, I think. What are the big names in crypto and maybe even traditional finance now forecasting for Bitcoin by 2030?
Yeah, this is where you see the human element, conviction, interpretation, sometimes even a bit of bias. So from the crypto side, take PlanB, the S2F guy. He sits very bullish post-halving. He's talked about maybe 500K to 800K around 2025 if things align, and definitely over $1 million later in the decade. But, given some past predictions were overly optimistic, opinions are kind of split on those higher targets now. It shows even the model creators can get caught up in the moment. Then you have someone like Cathie Wood at ARK Invest. They're known for bold tech predictions. Their 2030 scenarios, they span quite a range, from maybe 300K in a bear case up to $1.5 million in their bull case. And actually, her more recent comments have stretched that bull case even higher, towards maybe $3 or $4 million. If big institutions really jump in via ETFs, treasuries, maybe even some countries adopting it. Jurian Timmer at Fidelity uses a similar adoption Metcalfe approach. He also sees support for $1 million around 2030 in a sort of steady growth scenario. Jack Dorsey from Block, he's been public saying BTC could exceed $1 million before 2030. And Michael Saylor.
Well, MicroStrategy's whole strategy is Bitcoin. He sees it through a multi-decade lens, implying multi-million potential down the road. He's implicitly very bullish for 2030 if that digital gold idea keeps compounding.
Wow, it really is remarkable hearing figures like $1 million, even $3-4 million being discussed so openly by influential people inside crypto. But like you said, it's not just them anymore. Traditional finance, which was pretty skeptical for a long time, is now engaging seriously. What are their takes? Are they more measured, or are they getting ambitious too?
It's a definite shift. From the TradFi side, you see firms like Standard Chartered. They put out six-figure targets for the mid-decade. Some of their notes even mention ranges like 200K to 250K, specifically linked to strong ETF inflows. That's a key driver for them. Even JP Morgan, often seen as more cautious on crypto, put out a theoretical long-term value around 146K. But that's if Bitcoin's volatility drops towards gold levels and institutions allocate significantly. They didn't pin a date on that, though. And yeah, firms like ARK and Fidelity, their research is now aimed squarely at mainstream investors. They're openly entertaining hundreds of thousands to low millions by 2030. If you look at broader expert panels, like those Finder puts together, the average forecast seems to land around 400K to 500K by 2030. But there's a huge range in those individual predictions. Shows consensus is building, but conviction levels vary wildly.
Okay, but for a balanced view, we absolutely have to touch on the other side. Not everyone's buying the hype, right? What are the skeptics saying? It's important to hear that too.
Absolutely vital. While those big numbers are eye-catching, you still have plenty of traditional heavyweights arguing BTC could go to zero. Seriously. Their arguments usually center on regulation cracking down hard, or its lack of traditional cash flows, or maybe it just becomes obsolete, replaced by something better. It's the necessary counter-narrative. They question the core value, the risk of government bans, the potential for tech failures. And honestly, the sheer range here is what's fascinating. You've got multi-million-dollar targets on one end and zero on the other. It just highlights how uncertain and dynamic this whole space still is.
Okay, so we've got the models, we've heard from the experts, bulls and bears, but let's bring it back down. Ultimately, what does this mean for you, the listener? What are the real fundamental things you should actually be watching, the factors that will really drive Bitcoin's value, rather than just focusing on price targets?
All right, this is where the rubber meets the road. Forget crystal balls, let's talk drivers. First, the kind of predictable but still powerful stuff. Halvings in supply. We know they're coming 2024, 2028. Each one cuts new Bitcoin issuance dramatically, down to about 0.8% annual inflation after 24, then 0.4% after 28. Now, these are known events. The market might price them in early, but historically, they've often been followed by periods of strength. Then, probably the biggest variable, demand and adoption. This is where Bitcoin needs to prove its worth. We're seeing it with the spot ETFs bringing in new money. We're seeing some corporate treasuries dipping their toes in. There's its use in remittances, especially cross-border, and in emerging markets as a potential hedge against inflation or instability. These are all sources of structural demand. So for you listening, keep an eye on things like ETF net inflows. Are they consistently positive? Track active wallets on the network. Is usage growing? Look at the hash rate, the network's computing power and security. These are real-time indicators of health and adoption.
Those are definitely concrete things to watch. And inevitably, hovering over everything, regulation.
Oh, absolutely. Regulation is huge. It's almost binary. If you get clear and enabling policy, that could unlock enormous amounts of institutional capital, really integrate Bitcoin into the mainstream financial system. But if you get hostile regulation, coordinated crackdowns, that creates friction, reduces liquidity, and could seriously hamper growth. It's a major swing factor. Then there's technology and competition. Bitcoin needs to keep evolving. Internal scaling solutions like the Lightning Network or Layer 2s are crucial. They make transactions faster and cheaper, boosting its actual utility for payments. But there are risks too. What if there's a major security incident? Or what if a rival narrative from another crypto project gains more traction? That could pull focus and capital away.
And you can't ignore the wider world, right? The macro environment must play a big part, especially for something seen as a risk asset.
Totally. Bitcoin doesn't exist in a vacuum. Things like inflation, interest rates, global liquidity, they massively influence investors' appetite for risk. Interestingly, sometimes debt stress or financial instability can actually help Bitcoin's narrative as a non-sovereign store of value. People look for alternatives. But equally, tight money, high interest rates, that can definitely put a lid on upside potential, making safer assets look more attractive. And finally, the really big potential game changers, geopolitics and sovereign adoption. Imagine if major countries started adding Bitcoin to their reserves, or more nations made a legal tender. Those would be major tailwinds, huge validation. On the flip side, coordinated restrictions by major economic blocs, that would be a massive headwind. So yeah, all these factors are tangled together, constantly shifting. It's complex.
It really is a complex web. Okay, so we have all these drivers, all these models. How do we synthesize this? Our sources suggest, wisely I think, that focusing on ranges is better than fixating on one number, which leads us to painting the future using maybe 3 broad scenarios for 2030.
That's exactly. Let's start with the optimistic scenario. What needs to happen for Bitcoin to really fly by 2030? Well, you'd need strong adoption. That means ETFs continue to grow, more corporates add BTC to their balance sheets, maybe even a few smaller nations or sovereign funds get involved. You'd also need friendly regulation, or at least clarity that isn't hostile. The halvings get absorbed without major disruptions, and that digital gold narrative becomes really solid, globally accepted. If all that happens, the range could be somewhere between $1 million to $3 million plus per Bitcoin by 2030. There's even an upside tail beyond that if you get like serious fiat debasement or a massive shift away from traditional assets. The big risks here: getting ahead of ourselves over extrapolation or unexpected regulatory shocks coming out of nowhere.
Okay, that's the bright side. What about a more middle of the road, maybe more probable base or neutral scenario?
Right, the base scenario. Here, the assumptions are more moderate. Think it's steady adoption, not explosive, but consistent growth. You get adequate regulatory clarity, enough for institutions to operate comfortably, but maybe not a full embrace everywhere. No huge negative or positive surprises. Basically, Bitcoin continues to mature, behaving more like a digital gold 2.0. Still growing, but maybe the crazy volatility starts to dampen a bit. In this case, the projected range might be more like $250,000 to $800,000. You could maybe think of a mental midpoint around $500K. What are the risks here? Maybe the cycle amplitude diminishes too much, the booms aren't as boomy, or perhaps institutional uptake is slower than hoped, limiting the upside.
And then the flip side. What does a more difficult, pessimistic scenario look like for Bitcoin heading into 2030?
The pessimistic scenario assumes things go wrong. You get hostile policy, maybe coordinated international efforts to restrict crypto, maybe real interest rates stay persistently high, making risky assets like Bitcoin less attractive for a long time. Perhaps adoption stalls, the network effects weaken, and the whole narrative erodes. Maybe people lose faith in it as digital gold, or a better alternative truly emerges. If that happens, the range could drop significantly, maybe to $100,000 to $300,000. And the sources note there could be far worse tales if a fundamental shock hits. Think a major hack, a vulnerability found in the core code, something that really shakes confidence. So the main risks are those coordinated crackdowns or some kind of major technical incident.
These scenarios really help frame the possibilities, don't they? Much better than just latching onto one prediction. It gives you a landscape to think about. Okay, so we've covered a lot. Models, experts, drivers, scenarios. Let's bring it home. What does all this mean for you listening? How can you actually take this information and use it practically?
Yeah, this is the key takeaway bit. How do you operationalize this? First, the source is really emphasized. Define your thesis. Why are you interested in Bitcoin in the first place? Do you see it mainly as digital gold, a potential payments tech, a macro hedge against inflation or instability? Your answer really shapes what factors you should care most about. Second, track validation signals. Don't just set and forget. Actively monitor those things we talked about. Are ETF net inflows strong? Are big corporates adopting it? What are the latest regulatory milestones? Is user growth actually happening? These signals tell you which scenario might be unfolding.
Right, so track the signals that support or contradict your thesis. And then what?
Third step is crucial. Plan by scenario. Don't just react emotionally when the price swings. Instead, try to pre-commit how you might adjust your approach if certain signals hit specific thresholds. Like, if X regulatory clarity happens, I might consider increasing exposure. Or, if adoption stalls for Y period, I might reassess. Having a plan before things get crazy is key. And finally, maybe the hardest part, stay disciplined. Schedule time to rebalance if needed to align with your plan. Maybe even document your decisions and why you made them helps you learn. And definitely try to avoid FOMO, that fear of missing out. It's the enemy of rational decision-making, especially in volatile markets. A plan helps fight that urge.
That kind of structured approach sounds incredibly valuable, especially in crypto, where things move so fast and sentiment can shift so quickly. It gives you a framework, a rudder. Okay, so wrapping this up, it's really clear that projecting Bitcoin to 2030 involves, well, a mix of art and science, isn't it? What seems consistent across many models is that the fixed supply, combined with potential adoption growth, generally tilts things upward long term. We're seeing forecasts from the hundreds of thousands up to potentially millions per BTC by the end of the decade.
That's right. And it's significant that credible experts and institutions are increasingly entertaining that $1 million milestone. That wasn't happening a few years ago. But equally, we have to remember the credible skeptics pointing out real structural and regulatory risks. Those shouldn't be ignored. Ultimately, where Bitcoin lands will depend on those key factors. How the halvings play out, the actual depth of adoption, the regulatory regimes that form globally, the tech resilience and scaling, and, of course, the broader macro backdrop. So prudence really does favor thinking in ranges, understanding the drivers, not just picking a number.
Absolutely. This has been a really insightful exploration, a lot to think about. And maybe a final thought for you, our listener, to chew on. As Bitcoin heads towards 2030, what's the one key signal you will be watching most closely? And why do you think it holds the most sway over where it ultimately goes?
And just the essential reminder, this information is purely for educational and informational purposes. It is definitely not financial advice. Crypto assets are risky and can result in total loss. Please do your own research.
If this breakdown helped, subscribe and turn on notifications. You'll get the next market brief the moment it drops. See you soon.